Today, we're diving into how to manage project budgets and expenses. Let's start at the beginning with the proposal. When a project is scoped, managers and sometimes senior consultants estimate how much effort each role will require. These are typically built from detailed week-by-week estimates in a cost model. When complete, it will include each role, how many hours, and the appropriate rate card based on internal costs and margin targets that add up to this full contract amount. And that's whether it's time and materials, or this example with a fixed fee view. This is the number both the firm and the client are working from. It's what we're expected to deliver within and what the client budgets for. Once the project kicks off, those hours become the tracking baseline. There's forecasting that is done out for the remainder of the project, and each team member tracks their actual time, preferably each week as they deliver, where we can track the variance between actual hours versus the budget and forecast. These line items also help determine the burn rate. This is calculated by taking the actual hours so far, adding the remaining forecasted hours, dividing that by the total budgeted hours, times 100, and in this example, the burn rate is 94%. So what does that mean? Well, 100% means you're perfectly on pace with what was budgeted. Over 100%, you're burning too fast, meaning we may run out of budget. And under 100%, you may not be hitting the expected effort levels. This burn rate is how managers keep an eye on how the team is executing against the budgeted hours to hit the revenue and subsequent margin targets for the project. Consulting is a business, so let's talk about how these numbers get presented in a financial dashboard. This is a view managers are typically responsible for putting together to assess and present the health of the project to their leadership. For a time and materials contract with a cap or a not to exceed amount, this is a typical view. At the top, you'll usually see the total contract value. At the end of the project, this is the target and the expected amount of total revenue generated from the project. And then the projected total fees and costs, and this is based on actual plus forecasted hours, and the projected margin and overall variance. This will likely be presented on a monthly basis, so below that you'll see monthly trends, and that's budget, actuals, and this is for both fees and expenses. Expenses in most cases are travel costs, and there's usually a not to exceed clause in the contract that we're tracking against. Now, this helps managers see when they need to adjust course, whether it's reallocating resources, reforecasting, or escalating any scope issues that are impacting these numbers. Under the hood of the dashboard is resource level tracking. This is a consolidated view of all the individual hours tracking that we saw earlier. The whole project's team's hours are logged against this budget with variances flagged. Those hours will be multiplied to their bill rates, and this creates another financial view per team member to track whether they're burning above or below what's been planned. Any major variances, again, are flagged and investigated by the manager. Most firms will have this mostly automated in a combination of a time tracking system and some platform that will aggregate these numbers into the financial dashboard. All right, the last piece of the puzzle is invoicing. Most firms bill monthly and based on time and expenses submitted through the tracking system. Managers or the account lead need to make sure these invoices are accurate, submitted on time, and in the invoicing process of the client. This is how we get paid, so we need to always track what was submitted, when it's due, and how long it's been outstanding. If anything is aging past the due date, it's time to follow up with the client's accounts payable team and see if there's anything we can do to get those payments back on track. Timely payments are critical, so it's not just for the firm's cash flow, but to ensure your team's contractors get paid on time as well. So wrapping this all up, budget and expense management starts with a strong estimate that's proposed to the client. Once accepted and the project kicks off, there needs to be disciplined weekly tracking of hours with proactive communication around variances. All of this rolls up into a dashboard that monitors financial health and delivery success. And it all ends with clean, timely invoicing and collections. That's your end-to-end view of managing project budgets. You can check out the links below to download these templates and get some more information.